Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you guys how to make smarter trades. And today we're going to talk about all the trades that we made for Friday the 22nd, kind of rounding out one of the last weeks here in August before we head deep into September. Today we had two opening trades and one closing trade. Had a real nice move in Salesforce, which allowed us to close out CRM. So I'm going to cover that one first, so we go over that one, and then we'll talk about our two new opening trades, which was another calendar spread and then another vertical debit spread. Again, still trying to keep with the theme that we talked about last night about adding some different positions to our portfolio now that implied volatility is starting to come down. And that's where we'll talk a little bit more about the verticals and the calendars. Now, as always, if you guys have any comments or questions, add your comments right below this video. I'll make sure I get back to all of those tonight or tomorrow before the open. So the first trade, like I said, that we closed out of today was CRM, and a really nice move in Salesforce in the early morning today. So it kind of popped higher, and I'll show you guys the chart here in a second. But the reason that we closed out of this vertical credit spread is because now it's trading at about 6 cents and about as low as it's going to trade because we still have about 30 days to go in the expiration cycle. So there's a lot of people who I had comments back and they said, well, Kirk, why'd you close it out? It seems like it's definitely going to be a shoe-in winner. And it might be, but the market might also turn around. And at this point, what we're doing is risking this entire trade to make another $6. Now, we've already made $74 on the trade. So in my opinion, it's not worth the risk of going after $6 for the next 30 days to see this thing totally turn around and create a loss because, again, we know that markets are 100% cyclical in nature and that can happen. So in this case, we went ahead and bought back our credit spread that we had originally sold. So we originally sold a credit spread when CRM was trading lower and implied volatility was higher. Well, now CRM is trading higher and implied volatility is lower. Both things that we wanted to happen for us to make money happened exactly like we had planned for this trade. So you've got to learn to take these trades off and move on. So we went ahead and bought back our 50-45 credit put spread for a 6-cent debit. Now, if I go here to the chart of CRM, you guys can see, let me go here to the chart of CRM, and you guys can see exactly how much of a move it had. So you can see right now, right, it had earnings. So earnings made it pop and implied volatility dropped, had a huge move higher. And our trade was well below the market. And you can see not only with the move up in the stock, but also with the drop in implied volatility, that creates a really quick decay in option value, which really helps out our position. Okay, so the two new trades that I want to go over. The first one is POT. We've had pretty good success trading POT pretty much all year. We've traded at debit spreads, we traded at credit spreads, we've done calendars, we've done butterflies on it. We've had real good success trading this, and I like this trade still because it gives us a very small debit, so a very small cost for a pretty big potential win if we're right in this trade. So that's why I like this trade, especially in low volatility environments. With POT, what we have going on right now is we did a calendar call spread. So very similar to what we did last night, where we did the September, October. So all focused around these 37 calls. So we did only 37 calls. That's the only strike we were worrying about. And we bought the back month, which is October, sold the front month against it, which is September. So again, bought the back month or the 37 call for October, sold the front month, which is the 37 calls for September. The net price that we paid is about 17 cents in debit, so you can see that we've obviously entered a lot more of these and kind of adjusted up our position because of that very cheap debit. But you can do this on a one lot. Still works pretty good on a one lot. All the profit and loss stuff, all very relative. So now you can see that the stock is definitely trending lower, but what we're assuming here is that we want the stock maybe to close somewhere up here around 37. Now that's ideal, right? If the stock makes that big of a move, then that's good, right? We want it to move a little bit higher, and if it does, then that's where we want it to pin. But what I really like about this trade is, again, with a lot of these calendar spreads in POT, is that we have a very big window of opportunity. Now, again, we're a little bit bullish in this, and we're taking that bullish stance because it's very cheap. But our profit and loss starts really anywhere between about 35.5 and 38.5. So we've got a very big window here on this calendar spread that we can make money, and really kind of leading us to assume that if POT does rally, we can make money between, again, about 35.5, which is right down here, and about 38.5, which is all the way up here. So a very big profit window for us, and that's what we like with these calendar spreads, and it's just how the pricing worked out. Now, ideally, we're not going to hold this thing all the way till expiration. We're going to look to get at least maybe about a doubling in our premium. So we paid about 17 cents. If we could get double or a little bit more than that out of this trade, make another 20 cents or so on this trade and get out of it at 37 cents or 40 cents, I'd be very, very happy with that trade. So that's what we're really looking for here on this trade, is to get a little bit of a double in our premium. That's why we did it. Again, still very small position. And you'll notice with POT that implied volatility is at 0 basically. So it's only got upside potential at this point, which will help these calendar spreads start to expand in premium and value. The last trade that we entered today is F. I know it's the ticker's tucked in here very, very tight, but the ticker is F for Ford, and we were just very bearish on Ford overall. I'll go to some of the technicals that we kind of looked at here to determine which way we were going to go with Ford. But generally speaking, we need some bearish trades in our portfolio. Ford ended up being one of those bearish trades. We did a debit vertical put spread. So we bought the 17.5 puts, sold the 16.5 puts to help finance that purchase, and the net price that we paid is about 38 cents. Now you'll notice on this trade that we usually pay, if it's a dollar wide debit spread, we like to pay about 50 cents. And in this case, the market was trading about 38 cents. So we actually got a fairly good deal for this trade, because that puts our break even point, a little bit above 17, which is actually not too bad. So the stock just has to move down a little bit. We start to make money, and we actually have a bigger profit potential in this trade if Ford does to continue to move lower. So let me go to the chart here so you guys can see where Ford is right now. And you'll notice that the stock has definitely come off of the highs, right? And this is what I'm looking at, is that the stock has definitely come off of the highs after earnings. We got a very typical bounce after earnings, right? Usually when a stock has such a dramatic move lower, we get some bottom feeding coming in here on stocks, and the stock kind of rebounds. But you'll notice that it's also started to stall. So now the Ford started to stall, and now it's starting to move back the other way. So visually on the charts, we can see that the stock may be losing some steam from this bounce and may continue to head lower. Now, if I just throw up some technicals, and we've gone over some of these technicals before and some of the group coachings that we've done, you can see here on both CCI and on MACD that Ford is really, really close to giving a buy signal all week, but then started to move away from that zero barrier on CCI, which means that it's going to continue that downtrend that it started back here at the end of July. So you can see that July signal to sell Ford was a pretty good signal. It was a little late to the game, but it gave us a very, very good confident signal that we should sell Ford, and now we continue to get that signal where CCI and MACD are continuing to point lower, that Ford could be moving lower. So not to say that we absolutely emphatically know that's going to go lower, but sometimes we can use these technicals to our advantage and say, hey, is there something in the technicals that might show a directional move in Ford one way or the other? And in this case, the technicals are kind of pointing to the fact that Ford may continue lower on this downtrend that we just started back at the end of July. So if it does, we want to take advantage of that with our put spread. So that is our debit put spread in Ford. So really nothing else today. We'll get back into it heavy and hard on Monday, entering a lot of trades, continue to build up this portfolio that we're starting for September and also October. As always, if you guys have any comments or questions about these trades or any of the trades we make, add a question right below this video. I'll definitely get back to all of those tonight or tomorrow before the open. Now, if you're watching this video somewhere else on YouTube or else out there on the internet, you just have to understand that you're actually getting this video about 15 days after these trades, and this video is sent out to our members. So if you want to get real-time alerts and this video every single day breaking down all the trades that we make, open, close, adjust, hedge, whatever, you got to sign up at optionalpha.com, start the free trial, kick the tires, see if it's worth it for you. As always, happy trading and enjoy your weekend.